At today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point.
I'm not a financial advisor.
As of today, as of the release of the CPI, which is supposed to be the official big thing that was going to determine what the rate cut was going to be, we now can expect a 25 bip rate cut. And that gives them the ability to do two things. Number one, it gives the government the ability to surprise us and do a 50 bip rate cut, and they were in early, or people in the government went early, and the price would skyrocket, and that would be great for a lot of people, right? People aren't shorting. Well, all of a sudden, boom, out of nowhere, some things occurred. I haven't had time to actually look up and see what it was, but the odds have flipped now. The odds have flipped. It is now it is a good chance now that we are going to see. I think the odds went all the way up to like 80% or 70%, something like that we're going to get a 50 bip cut, a 0.5% rate cut. That is really bullish because the 0.25, it felt like it already kind of been baked in. And now, and this is what's so important, it's right at the point where Bitcoin is supposed to be rising according to the 4-year cycle theory. So now we are into a time when Bitcoin should be bullish, and we have a big macroeconomic thing coming, which is what is the FOMC interest rate decision. And the thing is, as I talked about yesterday, I believe there's a good chance we're getting a 50 bip cut, but I can change that tomorrow. Why tomorrow? Because tomorrow is the day we get the consumer price index numbers, the CPI numbers. And it has been said, we looked at it yesterday, that the decision on the amount of the rate cut is going to be based upon what comes out in the CPI. If the numbers are better than expected, then that's good. Then you can go and bet your bottom dollar it's going to be 50. Well, I mean, you should. I think it's going to be 50 bips, but it might not be. But that 50 could really get things going right about when Bitcoin should start going.
As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market and will continue to enable further progress on inflation.
Whenever there's a soft landing or a positive economic outlook, the market reacts bullishly to the first rate cut. After all, rate cuts mean debt is cheaper and investors' pockets are fuller. Maintaining a soft landing can also mean turning the money printer back on. At the end of the day, those in control will move the sentiment in the direction they want the price to go. When Jerome Powell speaks, whether he's dovish or hawkish, will show where the puppet masters want to move the market. Personally, I expect a bullish reaction to the rate cuts, given a soft landing is projected for the economy.